it looks like narrowly avoids a collision.
It's kind of one of those things you don't never want to do, and it's like crowded runways to some extent, or you don't know what happened. This is the problem. We have to find out what happened, but basically you don't want two planes basically sharing the same runway, right?
Yeah, and this is like it's forming a T. Video shared on social media showed the 737 aboard its landing moments from touching down before rapidly ascending again after the smaller jet began crossing the runway from a taxiway. The Southwest flight originated from Omaha, Nebraska.
Yeah, I mean, you know, the thing is we've had a few things happening in the world of airlines, and we've talked with our George Ferguson, and, you know, most people tend to say, and he is not just any person, he's someone informed, understands the space, was in the military too in terms of aerospace. And I just think, you know, many would still say it's safer to get on a plane than it is to get in a car.
Oh, yeah, no question.
Like,
absolutely no question.
Hands down. It just feels like there's been a lot of incidents over the last few months, and certainly just this year when it comes to airlines.
How about some eggflation?
Okay. Oh, you're flipping.
Did you see this McDonald's story?
I did not see
Okay, so McDonald's says that it will spare customers an egg surcharge. It's also going to launch a one-day offer on the McMuffin sandwich for just $1.
Why are they doing this?
The discount celebrates 50 years of breakfast menu items and arrives as the avian flu crisis pushes U.S. egg prices to record highs.
Yeah, that's pretty nice. Let's go ahead and get it. You know, I kind of like an Egg McMuffin. Have you ever had an Egg McMuffin?
I've had an Egg McMuffin.
Do you guys like Egg McMuffins? Who doesn't like an Egg McMuffin?
They're busy working, Carol.
Yeah, I know.
The McMuffin deal will be available to users of
nods.
McDonald's app.
I think John did a nod.
On March 2nd.
Yeah, he did a nod.
Okay, he did.
I
couldn't see everyone's face.
Yeah, but Denny's, Waffle House, they introduced fees to their menus. Did you just say that?
Yeah, no, I didn't say that. The egg surcharge.
Yeah.
That's what it is.
McMuffin deal available to users of the McDonald's app.
That's what I said.
Oh.
Yeah.
Well, so important it bears repeating.
Yeah, I know.
Worth it. No, but
got to download that McDonald's app.
Get in
create an account.
those digital users. You know what?
Sign in.
I'm really
You
embarrassed.
might have it already.
I think I might. Only because when I'm...
All right, so here's the deal.
There's times when I'm on a road trip and all I want is like an iced tea, and then I've got to get some French fries or...
That's fine. On March 2nd, you can order 2 of those. One for you and one for me.
You'd eat... I know you would eat it.
What's not to love?
You might even like a Happy Meal.
It's an egg.
It's an egg. It's an English muffin.
An English muffin.
I don't do cheese.
There's cheese on there.
Bacon.
You don't do cheese?
I don't do cheese.
I'll take your cheese.
I don't need cheese.
Okay.
I got enough cheese.
Okay.
All right. Don't go anywhere, folks. You might not be done with earnings, and you shouldn't be, because there's lots more to come. We're going to get into it and cut you down to the close. The closing bell, it starts right now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through that closing bell. The global simulcast, it starts right now. Scarlett Fu in the TV studio. Carol Massar and Tim Stenovic in the radio booth as we welcome our audiences across all of our platforms, including our partnership with YouTube. And Carol Massar.
What?
Jeez, guys.
Most stocks, I know, wow, she's really on it today.
Well, you know, Alex...
The market's holding up, but look, we're only down 0.4% in the S&P. We should point out the NASDAQ taking it a lot harder here on the day, but we should point out, at least in the S&P, the majority of stocks, Carol Massar, are in the green.
Yeah, which is what I always like to go to, right? Like, we have these major indices that, you know, it's one number, but if you dig a little bit deeper, I was going to go, you know, Alex, I've heard about your gambling problem.
Okay, it's just Ultimate Texas Hold'em. That's it. That's my jam.
That checks out. I like that. I like that. Anyway, no, she has no gambling problem. We overheard you guys going into the close, so it was kind of fun to hear your conversation.
One problem that we could be seeing right now is consumer confidence. The conference board this morning releasing that data. Yeah, you guys like that?
Yeah, that was a real sweet segue there.
Yeah.
Out of context comments are the best.
I'm being told to stay on task, guys.
No, actually, we're listening to you guys chat. When Tim's like, you know, it sounds like you and me kind of chatting, like the same thing. It was
Carol was telling me about the way she likes egg McMuffins. So
no cheese.
Buy Egg McMuffins?
Wow.
That's impressive.
They're now $1. They have a promotion.
Yeah,
they're not gonna spend more, cause you to pay more because of the eggs. McDonald's.
All right, we are getting the closing bells here in New York, and as obligated, you're required to clap here, whether it's an up day or a down day. There is some green on your screen. You'll find that in the Dow Jones Industrial Average, up about 160 points or so as we wait for these numbers to settle. That's going to be good for a gain of about 0.4%, and that is pretty much your bright spot. The S&P 500 back below that 6,000 level, down 28 points or 0.5%. The NASDAQ down more than 1% here on the day, and the Russell 2000, Carol, lower by 0.4%.
All right, we said earnings after the closing bell. We talked about gambling. Caesars Entertainment coming out with their numbers. Fourth quarter EPS, 5 cents a share. We're looking at fourth quarter same-store net revenue at Caesars of $2.8 billion. That's a little light, but pretty much in line, $2.82 billion. And fourth quarter net revenue of $2.80 billion. Fourth quarter same-store adjusted EBITDA, $882 million. That's a little light. $902.9 million is what the street was looking for. And just pulling it up on my Bloomberg, because we know Caesars is up about 5% here in 2025. I'm not seeing much movement here. It looks like the stock is unchanged in the aftermarket.
All right, you're looking at Caesars. I'm looking at Intuit. Shares unmoved in the after hours. The company coming out with its guidance saying that it still sees fiscal year adjusted operating income at $7.24 billion to $7.32 billion. Still seeing fiscal year revenue $18.16 billion to $18.35 billion. The estimate was for $18.28 billion. Just reiterating that fiscal year guidance. Second quarter adjusted EPS coming in above estimates at $3.32. Second quarter net revenue coming in at above estimates as well, $3.96 billion.
All right, let's move to the software sector. Workday coming out, the enterprise software company, reporting fourth quarter revenue, topping analyst estimates, $2.21 billion in the fourth quarter, higher than anticipated. Fourth quarter adjusted EPS of $1.92, also higher than the consensus estimate of $1.78. The company talking about fiscal 2026 subscription revenue representing a 14% growth and giving a operating margin for fiscal 2026 of about 28%. That stock up almost 5% in after-hours trade.
All right, I'm taking a look here at Grocery Outlet. For its fourth quarter, net sales came in kind of bang in line with estimates at $1.10. Taking a look at their 2025 potential, their comp sales are 2 to 3%. That's, again, bang in line with estimates, and their net sales in the high end, they see about $4.8 billion. So relatively solid when it comes to Grocery Outlet, but that stock is down by about 5%. I was trying to look through the release just to see if there's anything about, say, egg prices, inflation. I haven't been able to find that yet, but they do talk about key strategic initiatives that they're taking to help their foundation and future growth.
I'm looking for the same thing out of Jack in the Box. Not quite seeing it here, but the main headline on that company, the fast food chain, out with earnings, and also saying that its CEO plans to depart. CEO Darren Harris has apparently accepted a position outside of the company. He has resigned. The CFO will be in place as the interim CEO as a search for a permanent CEO. As for the earnings themselves, the company basically says that in the first quarter, it did see operating EPS of about $1.92 a share. That is a beat. Street was looking for $1.70. The company also saying here that on restaurant level margins also came in well above street estimates at about 23.2%. Street was looking for roughly about 20%, guys.
All right, off to Instacart I go, and you can see this stock already down a bunch in the aftermarket. Let's go to the outlook. Sees first quarter adjusted EBITDA of $220 million to $230 million. The estimate on the street was above all of that, $237.1 million. You're seeing Instacart down about 6%. Also sees first quarter gross transaction value $9 billion to $9.15 billion. Just going back to the fourth quarter, so the last quarter, fourth quarter adjusted EBITDA of $252 million. That is above the street estimate of $239.6 million. Fourth quarter total revenue, that's a little light, $883 million versus an estimate of $890.9 million. And then again, fourth quarter orders, again, looking backwards, $77.5 million. That is above the street estimate of $75.9, but nonetheless, the outlook is why his stock is down 6% in the aftermarket.
Digging into the fourth quarter 2024 shareholder letter for Instacart, the company is saying that online grocery is outpacing in-store grocery growth by more than 3x, making this a pivotal moment for grocers to compete digitally. With high fixed costs and low operating margins, winning a point of share can drive incremental profit dollars and margin expansion for grocers. But the vast majority of grocers don't have the tech, time, or resources to adapt alone. They need an ally. obviously Instacart wants to be that ally.
We need to go down to Washington. Some breaking news there. The President of the United States signing new executive orders, one on healthcare, one on copper. The healthcare executive order, in his words, is about price transparency in healthcare. We're going to have to get you some more details on exactly what that means. The President also in the Oval Office signing a separate executive order on copper that, in his words, could lead to copper tariffs. And Trump, in his words, saying that the copper order will have a big impact. We'll have to keep an eye on that. Of course, right now, the main spot markets for copper are closed. But, of course, once that opens, we'll see if there's movement there, guys.
Yeah, looking at the futures market, we are seeing some movement on that. Just real quick, First Solar, they're coming in. They're missing their estimates for the fourth quarter, coming in $3.65 a share. Their net sales, though, a little better than estimated, coming in at $1.51 billion. They see their total net sales for this year on the high end, about $5.8 billion. That definitely beats estimates. So watching that as we head into a different kind of administration. Operating expense anywhere from $470 to $510 million for the full 2025, guys.
Okay, Lucid, the EV car maker, the luxury EV car maker, also coming out with results. Fourth quarter adjusted loss per share was 22 cents. That was narrower than what analysts had been anticipating. It also announces a CEO transition with Mark Winterhoff named interim CEO. Overall, the adjusted EBITDA loss for the fourth quarter of $577.3 million was slightly higher, slightly larger than what was anticipated. In terms of the outlook, we're just getting bits and pieces here. 2025 production will be about 20,000 vehicles. Again, this is Lucid. The stock currently up almost 11% in after-hours trade.
All right, I do want to go back to those executive orders that President Trump is signing right now in the Oval Office, and specifically the one on copper. I'm not exactly clear what the impetus for this is, but he's basically saying that this will effectively launch a Commerce Department investigation that could lead to tariffs on copper. And I guess I am curious as to how this folds in with some of the other tariff announcements or pronouncements that he's made so far on some of the other commodities out there.
Yeah, he talks about it being a probe into derivative imports for copper, so I wonder if it's very targeted. But look, if you're going to tax copper, steel, and aluminum, how are you going to build anything? I mean, everything's just going to be really expensive to then import and build.
I guess the whole idea is to use American-produced materials, right? But Alex, I mean, you know this world so much better than I do. Do we import a lot of copper, or is you know, what's the market look like?
I mean, a lot of the copper winds up coming from South America, for example. We still have copper here for sure, but you know, Canada also has some in South America, so you got to import it no matter where you go.
Yeah, this copper investigation or probe is supposed to be based on national security, not trade imbalance. Just looking at copper futures here in the aftermarket, up about 1.2%. So yeah, we'll look for some more details on this, but bring up some really good point, right? If all this stuff is so expensive, how do you build anything here in the United States? So questions to be answered. All right, guys, busy aftermarket news flow, no doubt about that. Our cross-platform on radio, TV, YouTube, and of course, Bloomberg Originals. We call it the closing bell. Alex is heading out. She's going to find out more about this copper. I know she will. And of course, Romaine and Scarlett continuing on TV. Tim and I continuing right here on Business Week.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Hey, more on the headlines coming out of Washington right now. The president saying that a copper order will have a big impact, that Commerce will probe copper derivative imports. The exact list is unclear. The president signing executive action directing the Commerce Department to examine possible copper tariffs. It's the latest in a string of measures aimed at imposing sector-specific levies that offer to reshape global supply chains.
Yeah, it's kind of fascinating, right? And we are increasingly talking about the minerals market. You know, keep in mind that earlier today, what really caught our attention is that news that the Ukraine has agreed with the U.S. on a deal to jointly develop its natural resources, which the White House considers its first step toward reaching a ceasefire with Russia. And this has to do with a minerals deal. Again, a lot of details we're kind of waiting to figure out on all of this.
Oh, we got a great voice on this. Oscar Lanowski is the founder and group CEO at Orion Resource Partners. He joins us from the BMO Global Metals Conference down in Hollywood, Florida. Oscar, good to have you with us. We're getting a little bit more detail on the copper news. The officials quoted in this story said it was premature to discuss a potential rate for the copper tariffs in response to a reporter's question, but contextualize this for us. Copper tariffs, what would they mean?
Well, certainly, as you've pointed out earlier, copper is an imported material by and large in the United States. Some domestic production exists, of course, but it is a big export from South America, particularly Chile, into the United States. Tariffs will, depending on what shape they take, and obviously the devil is in the details, will certainly impact the price of landed material in the United States. I believe that there is probably a investigation at the heart of this as to N-shaped material for various forms of copper. There's also a discussion about what to do about copper scrap versus refined primary material. But again, it's too early to tell at this point. The details are vital to determining what the exact impact would be.
Right, and it's an investigation, right? It's the Section 232 of the Trade Expansion Act. I'm reading from our reporting. It may lead to tariffs on copper imports, which we know if indeed that would raise costs for things. You know, it is interesting that's going on. A headline crossing the Bloomberg coming from Reuters about Ukrainian President Zelensky planning to meet with President Trump on Friday. Earlier today, Oscar, we had talked about a possible deal with Ukraine and the United States to develop Ukraine's natural resources. And we've talked about minerals in particular, mineral deposits there. What's the reality of what is there in Ukraine? Where's the value? What's the amount?
It's actually a fairly interesting dilemma for the Ukraine. They do have a fair degree of iron ore. They do have tungsten. They have titanium on sites. There are at least 4 mining companies that we know of that are developing or looking at, increased refining capacity in that country to shift metal. Some of the best resources, though, are really in this sort of gray zone where it's territory that's currently occupied by Russia or very close to the territory occupied by Russia. And the question will be how much of that material will stay with the Ukraine and how much will not. It's impossible to tell that at this point, but there's a lot of optionality in that country right now. Mm-hmm. And I believe that it's something that really speaks to how the U.S. and allies of the U.S. are becoming more and more aware of the centrality of some of these mineral sources and particularly how to process those into final shaped material that they can use for industrial and military and other uses.
So it's a rich area. It sounds like it might be some questions about who actually has access to that territory, right? Either Ukraine or Russia. But is it a rich area? We had done some reporting that said the president was looking for the equivalent of about $500 billion from rare earths, mainly used in high-strength magnets. Despite reports of $10 trillion in mineral deposits, Ukraine has no major rare earth reserves that are internationally recognized as economically viable. Is that correct?
That is correct. You have to, of course, assume certain price parameters when you make something economic or not economic. Mm-hmm. I think the more important question than whether or not the reserves or resources, should they be economic or not at this point, is what processing capability can be put to work on this. I mean, the rare earths themselves are not particularly rare. What they are is very, very difficult to separate from host rock. And the expertise in the world in doing that really resides in China.
Right.
And so the question becomes, you might have the best ore body in the world in the Ukraine, but if you don't have the processing capacity or knowledge, it might as well just sit in the ground.
It's like bingo, right? Like it doesn't matter who has access, but ultimately then you've got to have a relationship with China in order to process.
But why can't the U.S. or why can't Ukraine process these? Like, is it as difficult as making advanced semiconductors?
It is an incredibly difficult process. It's about a 19-step chemical toxic process that needs as much art as science to be successful economically, and the U.S. and the West have some capability in that area, but the real stars are the Chinese.
So I am curious, we are curious, you're at this Global Metals Conference, BMO Global Metals Conference, BMO. What is it that everybody's talking about? What's top of mind?
I think there's two main topics. Obviously, the resiliency of the gold price. It's, we find ourselves in unusual circumstances, and that the gold price is stable to rising, and the dollar hasn't exactly been a poor performer. That's atypical historically. Usually, the gold price is seen as the hedge against the U.S. dollar, and so they move in opposite directions. They've been moving in the same direction largely now for a little while, and that anomaly has led to a lot of conversations here in Florida. The second topic, obviously, is to some degree what the West will do about critical materials, critical minerals, and the first initiatives out of the administration recognize the importance of that. And we're pretty happy in this conference to see sort of a more joined up initiative on sourcing that and potentially processing that. And I think what you heard today about the copper situation, the EO on that is really potentially a move to reshoring some of that processing capacity back into the United States.
Do we want to be processing copper in the United States?
Absolutely, we do. Yes, it is. It's called Dr. Copper for a reason. It is an essential metal in many parts of the U.S. economy and the U.S. military. And having that onshore and being able to make sure that you have access to that vital raw material on your own terms is really essential to the U.S.
How did it move out of the U.S.? Was it like everything else? It was just cheaper to process out of the U.S.?
It was cheaper to process outside the United States. As part of the sort of trend of globalization, the lowest best cost center for processing was not the United States, and so therefore processing slowly moved out of the country. And we find ourselves in a place now where we want to balance that out a little bit. We want to make sure that for national security and other reasons we have access to vital raw materials. And I think.
Just help us understand, because this is I'm out of my element, pun intended here. But just in 20 seconds, do we need to have the copper in the ground here to process it, or do we import the raw material and then process it? Just 20 seconds.
Both are possible. Obviously, an integrated supply chain in the United States is the most favorable option, but certainly raw material, concentrate form copper, and then processing it here as a second alternative is also very possible. Either way, processed material, copper is vital to us.
We got to run. Come back soon. This was fascinating. Oscar, thank you so much. He's the founder and group CEO of Orion Resource Partners.
day long here at Bloomberg, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. President Trump has signed an executive action directing the Commerce Department to examine possible copper tariffs. It is the latest in a string of measures aimed at imposing sector-specific levies that offer to reshape global supply chains. Ukrainian President Vladimir Zelensky plans to travel to Washington on Friday to meet President Trump following the minerals deal agreement. That, according to Reuters, which cites two identified people with knowledge of the matter. And after the bell, earnings beat out of Intuit. That is the owner of TurboTax, QuickBooks, and MailChimp. Shares of Intuit higher after hours, up by roughly 3%. The Dow, the S&P, NASDAQ was a mixed finish today. The Dow up 159, up 0.4%. The S&P down 28, down 0.5. NASDAQ down 260, a decline of 1.4%. 10-year 4.29% with a 2-year 4.09%. Gold down $34 the ounce, down 1.2%. 29.17 the ounce. West Texas Intermediate crude down 2.2%, 69.14 a barrel. Bitcoin, a major move lower today. Bitcoin down 6.3% to 88,059. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Donald Trump's administration sketching out tougher versions of U.S. semiconductor curbs and pressuring key allies to escalate their restrictions on China's chip industry. It's an early indication the new U.S. president plans to expand efforts that began under Joe Biden to limit Beijing's technological prowess. Edward Fishman has a lot of experience when it comes to sanctions and the like. He's a former State Department sanctions official, also senior research scholar and professor at Columbia University's School of International and Public Affairs. He's got a brand new book out. It's out today. It's called Choke Points: American Power in the Age of Economic Warfare. He joins us here in the Bloomberg Interactive Brokers studio. Professor, welcome. Congratulations on the book.
Thanks so much for having me on today.
Well, you've seen firsthand the power that the U.S. wields when it comes to harnessing Wall Street, Silicon Valley, big oil to take on America's enemies. Is it effective?
Look, sometimes people ask me, do sanctions work? And my response is often, have you ever asked a general or an admiral, does a bomb work? Well, a bomb is very effective at blowing things up, but it doesn't always get us what we want politically. Because of the choke points that I mentioned in my book, such as the US dollar, advanced semiconductor technology, oil supply chains, the US government has tremendous power to impose economic harm on foreign countries. What we're less good at is taking that harm and translating it into the political outcome we want.
Well, I remember 3 years ago, we were sitting in this studio and we were going through all the companies that had just announced they would stop doing business in Russia as a result of Russia's invasion of Ukraine. No more McDonald's, no more Coca-Cola. I mean, the list goes on. And people were theorizing, oh, as soon as, Russians can't get their iPhones or their iCloud doesn't work or whatever, then it's going to be an issue for Putin's government. Fast forward 3 years, and it looks like it didn't matter at all.
I would disagree with that. I think that if you look back at the very beginning of the invasion, clearly Biden's goal was to deter Putin from invading in the first place through the threat of swift and severe consequences. That failed, right? Then there was a big hit on Russia. They kind of adapted, but where are we now? You've got interest rates over 20%. You can't get a home mortgage in Russia for anything less than 30%. You've got sky-high inflation. The Central Bank of Russia projects zero growth, basically, this year. So what that means for those of us who interpret Kremlin stuff, probably a recession. So I think that sanctions can take time to work, the same way that, wars take long to be fought. Economic wars aren't usually won in a day. But right now, Russia's on the ropes. And I think that explains why Putin is so desperate for a deal with Trump right now.
Tell us about the history of choke points and how they've evolved into what the U.S. considers choke points, or what the U.S. has as choke points today.
Yeah, thanks for asking that, because, historically, choke points are geographic features. So for anyone who's traveled to Turkey or Istanbul, the Bosphorus is a classic choke point where you have 3 million barrels of oil passing through a narrow strait every single day. And so throughout history, states have used these choke points to put pressure on other countries. For instance, by parking a ship right in front of that choke point and saying, "Thou shalt not pass." And really, that is how choke points were weaponized all the way up until the turn of the 21st century. Going back to the famous embargo on Iraq that the UN Security Council did in the 1990s, that was implemented by warships patrolling the Persian Gulf 24/7 for 13 straight years. But the choke points that I described earlier, such as the US dollar and these integrated financial systems and supply chains, which really come out of the hyper-globalization of the 1990s, now US officials can sign a document in their office from Washington and impose much, much more economic harm even than those old blockades where you put warships in the Persian Gulf.
So you said, I think before, and forgive me if I'm misquoting, that the U.S. maybe hasn't been so good about using their choke points to get maybe their desired outcome. But is President Trump somebody who maybe understands the use of these choke points to maybe get to a desired income?
So President Trump certainly likes using economic warfare.
Yeah.
During his first term, he imposed twice as many sanctions as the previous record holder, Barack Obama. So he loves sanctions. He says he's a tariff man. The thing I'm a little bit skeptical of, though, when it comes to Trump's use of economic warfare is his love for tariffs. Tariffs are a much weaker tool, frankly, than sanctions. What a tariff is a tax on importers, right? So, for instance, we're putting a tariff on copper, I heard on your news program earlier today.
Possibly. They're doing an investigation and they're, yeah.
So that's possible. What that would mean is a U.S. importer of copper from a foreign country would have to pay a tax on that. It doesn't actually block things from coming into the United States. To really weaponize a choke point, you have to cut it off entirely. So actually, these tariffs are a fairly weak instrument. And I think that's why they haven't been particularly effective at getting anything that Donald Trump wants so far.
Would you say that tariffs are part of economic warfare, or would you not go that far?
Yeah, this is a really important question because historically, the answer is no. Tariffs have been used primarily for economic reasons, such as protecting domestic industries from foreign competition or to use in trade negotiations. What they haven't been used as is a national security tool to try to get a deal, for instance, over the war in Ukraine, or to try to bludgeon Iran's economy. And the reason they haven't been used for that is because they're a weak tool, right? Iran, you know, we have a trade embargo on Iran. We don't import anything from Iran, so it wouldn't make sense to put tariffs on them.
How effective are sanctions in a world where a country like China can come in and help other economies get around sanctions that are imposed by the rest of the world?
So China certainly does play a white knight role, and they've played that role for Russia, right? In particular, you know, when Russia was cut off from components, for instance, like semiconductors from the West, China has been a lifeline. And really, you know, that's why we've seen Russia-China trade double, really, since the beginning of the Ukraine war. But what I would say is that there are limits to the role China can play, critically in this space of finance, because the RMB is not a competitor to the US dollar.
Well, that's where I want to go, because the ultimate tool, weapon, is the US dollar, is it not?
Indeed it is.
So tell us about, as long as the US dollar reigns supreme, you know, we go day to day, week to week, month to month, talking geopolitics and what seems to be these new stress points and pushback against globalization. But as long as the US dollar reigns supreme, does the US kind of reign supreme?
Yes, I think the dollar is the most impactful and important choke point in economic warfare. And that's why China, Russia, other countries are investing heavily in trying to figure out a way around this choke point. I think the thing that people misunderstand, though, is they say, oh, well, the dollar is still the world's reserve currency, so it's secure. The thing is, the way that the U.S. weaponizes the dollar is really less as a reserve currency and more as a medium of exchange, a payment currency. And what you've seen China do is launch something like the digital RMB, a central bank digital currency.
Right.
They put forward a platform called mBridge, which allows cross-border payment settlement using digital currencies. These things could develop in parallel to the dollar-based system and ultimately erode U.S. financial power.
So what you're saying, and this is kind of my world when it comes to crypto, we have a crypto show here every Tuesday at noon.
Cheap plug, but go ahead.
Is there a chance that the rise of digital currencies, the rise of Bitcoin, the rise of central bank digital currencies will decrease the power that countries have when it comes to sanctions?
The answer is no. What it could do, though, is redistribute the power. Because if you think about it, there's no reason that a digital currency couldn't be weaponized, right? If the digital RMB becomes sort of the main currency for cross-border settlement, which, by the way, it could, because China's got 120 countries who consider
But
China
that's
as number one trading
that's a
partner.
centralized digital currency. What about a decentralized digital currency like Bitcoin?
Yeah, I think it depends. Look, ultimately, Bitcoin does live on servers. There are companies that have to hold the wallets, and so there are ability to weaponize that. We've seen the U.S. Treasury Department add Bitcoin wallets to the sanctions list, and we also, famously, the most significant sanctions violation settlement of the last several years was against Binance when they were fined $4 billion. So I do not think that cryptocurrencies or central bank digital currencies are in any way sanctions-proof. The key for the United States, if it wants to retain this dominance, is for the United States to be the leader in digital currencies.
Well, that's what I was going to ask you. Is this then the argument for the U.S. government creating some kind of digital currency for transactional purposes?
Yes.
Like a government, yes.
Yes, definitely. I think that it is a pity that the United States does not have a central bank digital currency. I have no idea why the Trump administration seems hostile to that, and that dates back to their previous administration. But while we linger, China moves ahead.
But would there be the same pushback against other nations who don't like the dominance of the U.S. dollar to push back once again against the dominance of a U.S. central bank currency?
Sure, but we're the incumbent, right? So if the Fed were to launch a central bank digital currency that was considered effectively the same as dollars, then all it would do is cut off at the knees things like the Chinese digital renminbi, which right now is running ahead in the race as we're kind of just sitting at the starting line doing nothing. And this is a really important point I make in choke points, because these choke points, they're not immutable. Some of them fade, others rise. They change over time.
Right.
Critical minerals, batteries, these are choke points that China controls, not us. And if we don't continue to innovate in these spaces, we will not stay ahead.
So AI, is that a choke point?
Well, yes, certainly. What I will say, though, it's really the computing power undergirding AI. So the semiconductors.
The components, yeah.
Exactly.
Look, have you sent the book to members of the Trump administration, the Crypto and AI czar, David Sachs?
I have not sent the book to David Sachs. I would welcome a conversation with David Sachs about the book. I think it would be great to talk to him about. I am, what I will say, in touch with folks at the National Security Council, and I know that they're very interested in the book, and we'll be talking to them about it soon.
Do they understand the need for a central bank digital currency?
I don't know, honestly. I haven't talked to people about that. I do not know David Sachs, so I can't say where he stands. What I do know is that Trump himself has been hostile to this idea.
We've talked more about war in the last couple of years around the globe, but is it economic warfare that is really the bigger challenges going forward? And forgive me, just about 30 seconds.
Yes, it is. The reason is we have great power competition between the U.S., China, and Russia. We all have got nuclear weapons. We're going to avoid fighting at all costs. So what's that mean? We are going to compete in the economic space. Economic warfare, we're living in an age of economic warfare.
Fascinating conversation. Do come back soon. Love to continue this. Edward Fishman, Senior Research Scholar and Professor at Columbia University School of International and Public Affairs. We used to call it SIA when I was up there.
They call it SEPA now, right?
SEPA now.
Yes.
His new book, Choke Points, American Power in the Age of Economic Warfare. Thank you so much. Really enjoyed it.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. An update for the Dow, a down day for the S&P and the NASDAQ Composite Index. Stocks closed at a 5-week low. Bonds surged as another disappointing reading on the U.S. consumer fueled concern about the health of the U.S. economy. Right to the numbers of the S&P today, closing lower by 28 points, now at 59.55. A drop today of 0.5%. Dow Industrials up 159. For the Dow, a gain of 0.4%. NASDAQ down 260. For the NASDAQ Composite Index, a drop of 1.4%. 10-year 4.29%. The 2-year 4.09%. Gold down $35 the ounce, down 1.2%. 29.15. And West Texas Intermediate crude down 2.4%. 69.04 a barrel on crude. Bitcoin, a major sell-off there today, down 6.2%. Bitcoin 88,135. So what about markets and deciphering all of the news out of Washington? That question today for Louis Navellier, Chief Investment Officer at Navellier and Associates, who is a guest right here on Bloomberg Business Week.
I'm ignoring most of it. I think the tariffs aren't going to be that inflationary because, let's make a deal with Trump. And then we have a very strong dollar that's going to keep imported prices down. But I'm mostly watching how he gets along with the international guys.
Louis Navellier interviewed right here on Bloomberg Business Week. Keeping an eye on Intuit shares after hours, now up 5%. We did see an after-the-bell earnings beat from Intuit. That is the owner of TurboTax, QuickBooks, and MailChimp. Again, after hours, shares of Intuit up by 5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Carol, how's this for an office park? 12 renewably powered office buildings with windows scrubbed by drones.
Like it.
A fitness center complete with meditation rooms and pickleball courts.
Totally like it.
A bougie suburb's worth of walkable shops and restaurants featuring a brewery, a bike store, a tapas bar, a sushi place, and a coffee shop serving up items like salted honey,
Is this
oat milk,
Portland?
flat whites. Nope. It's not Silicon Valley, it's not Portland, it's not Austin. It's Bentonville, Arkansas, and it's where Walmart's new 350-acre campus that's meant to lure talent from the coast as Walmart takes on Amazon and more. Walmart wants to be something for everyone in a divided America is the cover of the forthcoming new issue of Bloomberg Business Week. Read it now, though, on the Bloomberg and at Bloomberg.com/businessweek. Devin Leonard, one of the reporters who worked on that story, spent some time in Bentonville. He's senior global business writer for Bloomberg Business Week. He joins us here in the Bloomberg Interactive Brokers studio. What would Sam Walton think of this new headquarters?
Oh, that's a good question, Tim. I mean, this is a guy who used to go around their old headquarters, which is in a distribution center. I don't know if you went there, Carol, maybe when you were there, but anyway, it was pretty bare bones. But basically, he would say there are no cash registers in the home office. So clearly, they've diverted a little bit from that philosophy. Of course, his name's all over the place, and there's a big conference center named after him. So maybe he would. And also there's also a rooftop bar in the new Marriott Hotel named after his quail hunting grounds or ranch in Texas. So maybe maybe he'd feel good about all that. So.
Well, there's a nugget in your story about his office, right? And I think he kept a gun just in case it was like time to go out and hunt some quail. Why did you guys decide it was time to take a deep dive into Walmart and go visit?
Well, you know how these things work. Somebody just says, "Oh, we should do a story about Walmart. It'd be great to have Doug McMillan on the cover." But then the timing actually wound up being really great because he's sort of taken them in his first decade. He's sort of turned them from this internet clueless kind of dinosaur into this possible Amazon killer with a real online business and all. But then kind of what do you do? And what you do is try to do some of this other stuff that you've tried before, and you failed, but you didn't have the digital component, which is like let's make a big push for more upscale customers and. They have like a third-party marketplace like Amazon, so they're selling like $4,000 Gucci bags and things like that. That's the thing to ask about what Sam Walton would think. But so they're in a position to do that. They're kind of rebooting a lot of stores. But I think the idea is like look, if there's people who would never go to a Walmart even now, and a lot of them have been going during because high inflation,
right?
They do well in bad times, but you don't have to go. You can order online, and they have a pretty good delivery service. So that now's the time to make that big push.
What's been so interesting too, right, Tim, that we've talked about, it's not just folks that are looking to save some money in terms of shopping. Walmart has talked pretty openly about the wealthier consumer and customer.
Well, that's what they're saying. I mean, the big question is, are they there because of inflation? I mean,
Yeah.
the part of their business that's doing really well is the so-called non-discretionary side, which is like the food side, and things like that. The discretionary side, which is home appliances and things like that, that's still that hasn't been those sales haven't been going up. So the question is, are people just there shopping for groceries because food prices have gone up so much, or are they going to make the switch and buy everything at Walmart? And that's unclear. We'll see what happens about that.
So, Walmart's tried to do this in the past with Jet.com. Mark Lorry came in. I think you point out in the story that he was actually paid more than Doug McMillon at the time. That wasn't exactly a resounding success. They had this Jet Black membership. And I didn't know this, but even earlier in his tenure, they tried to bring on sort of like higher end consumers. What's different about this time?
Well, Jet itself, didn't turn out to be, Walmart's, e-commerce brand. But I think what did work was basically bringing all these people in here and, being in there, not in here, shaking things up and basically demonstrating kind of to the rest of the world, we're willing to do this and just, bring, it was a place, historically it's been, a lot of lifers and people who have been sort of change resistant. So just by doing that, I think, well, was it worth the $3.3 billion? I don't know. Maybe I guess they had the money and he had the board behind. I mean, the Waltons own 40% of the company. But what they're saying now, though, Tim, is that this is like 15 years ago or 20 years ago. They tried to do some of the same stuff with designer clothes. That fell flat. They did a big redesign of the stores to make them more like Target. That fell flat. But now they have a much more built out sort of digital side, and and they can offer delivery and things like that, and then also they have that third party marketplace, and they can sell all kinds of stuff that they didn't before. So they probably are in a better position. Is this still going to and I don't know, look at the competition. I mean, Target's doing terribly. So is it going to work? It's going to take a little bit longer. We probably need to get out of this cycle, and see when there's an upswing of the economy. Do those people who've been shopping there, the upscale people, do they stay? I mean, that'll be that. If they do, that'll be the proof.
Devin, I think what's interesting is who is Doug McMillon and what he has done at this company, and he is someone who's been there for a long time, not just a CEO, but a long time, and really kind of transformed to some extent how people look at this retailer.
Well, that's the other thing that's
and
interesting.
Who is he?
Well, he's some guy who, his family moved to Bentonville, at some point, and he's in high school, and he got a job unloading trucks at the warehouse, and then he just never left. I mean, he went to University of Arkansas and got his undergraduate degree, went to the University of Tulsa, got his MBA, and then he came back and became a buyer. But he early on became an advocate for we got to go harder in e-commerce, and I think that was a pretty uphill battle. But he dates back to the Sam Walton days, and would have interacted with Sam Walton as a buyer sort of back in the early 90s. Sam Walton died in 1992.
Right.
But so he has kind of one foot in the past, and then I think that sort of helps him with his other foot kind of in the future, but to kind of move the company forward. He has this, I think he has a credibility with a board, which is what's really important. The Walton family controls the board. They back him, and I just think the fact that he's kind of respects the past, certainly pays lip service to the past, and but is also has this vision, for the future that's sort of made him kind of a winning CEO. So
there's a part in your piece that talks about the tension between being located in Bentonville and the policies of the state versus the coastal folks who they are trying to attract to the state. Take us there and to that anti-abortion rally and what was going on.
Well, I mean, that's been part of the issue is just, you need to become more of a, an internet-based company, but you're not going to, the talent that you need isn't all sort of in Northwest Arkansas. You still have to lure people, to bring in people from Silicon Valley. And, you're trying to talk them into, they have offices in Silicon Valley too, but ultimately, if you want to be part of the leadership, you really have to be there in Bentonville. And then it's kind of like, well, it's still a very, conservative state. It went very, very, heavy for Trump in the last election. And, Bentonville itself, it's definitely, a more liberal place. It's a much more diverse place probably than it was, 10 or 20 years ago. But, it's still in Northwest Arkansas. I mean, there was a pro-life rally on Saturday, before I left. Of course, there were counter-protesters too. There's some guy I got in a big discussion sitting at the bar who turned out to be an ex-Walmart guy, but sitting at the bar at the hotel. It was a very nice sushi restaurant there, but they didn't have that 20 years ago. I can tell you that.
It's different.
Yeah. But he somehow we got to talking about politics, and he started talking about a safe full of like assault rifles and because we're talking about Trump, and I was like, well, I don't know about that January 6th if that was the best thing. And he said, insurrection, that really wasn't an insurrection. I have all these guns. If people like me went down there would have been an insurrection, a real insurrection. We might have lost, but it would have been an insurrection. And it was. You don't have those conversations every day in New York, but I don't know. Maybe it depends on where you go out. Maybe I'm just missing them.
I think it's always great, like when you do get out, right?
Yeah.
And you realize kind of what is the fabric of America, right? And I think it's very easy when you live in one state or on one of the coasts that you think just one thing. And it kind of speaks to when you're such a giant in the retail space like Walmart. I guess you have to be a little bit careful, but you also have to appeal to so many different populations across the country, and it's really wide and diverse.
No, and he's, Doug McMillan's, mantra is, we want to sell to everybody, and,
right.
And so I think there was this moment where CEOs were being more outspoken, and he was one of them, and just the fact that the CEO of Walmart was doing things like lobbying, state officials in Arkansas not to pass. A bill that would have restricted LGBTQ rights. That was huge. That made news. But right now, things are a little different. And
he was at the inauguration.
Yeah,
but not on stage.
Right. No, he wasn't right up there with
Elon and Jeff Bezos.
Right.
Listen, that whole dynamic is kind of funny, right? Like who got the front row seat?
Yeah, he was there, but not necessarily hiding, but he wasn't as prominently displayed as some of the other executives.
No, and he definitely wasn't really all that. We talked to him about that. I think Brad asked him about that, and he, Brad Stone, the editor of the Business Week, was there with us, but I think he was, he didn't sound, super thrilled. Like he was invited, and maybe there'd be seating, maybe there wouldn't because they were moving it around. But it was anyway. I mean, he was trying to put the best face on it. He'd gone to Mar-a-Lago, and he was saying we just wanted to say, how can we help? And no, I worked with Trump during COVID and all that stuff. But no, it's he's got a.
It's the dance of many CEOs, right?
Yeah, totally. But since they're so big, the biggest retailer, I mean, it's really interesting to watch, and it's really important to note. It's not some like little company or something like that. They can really be affected by all these Trump administration policies and stuff. So
and increasingly like Amazon, right? In terms of things that maybe while it poo-pooed maybe Amazon in the early days in the digital marketplace, it's now embracing a lot, whether it's membership, whether it's ads, whether it's a lot of things, right? Increasingly becoming a lot more like Amazon.
Right, no, totally. I mean, they have a ways to go, but I mean, no, you're right. But growing advertising business, growing third-party marketplace, their membership Walmart Plus is still very small, compared to Amazon. We probably should have thrown that in, but they're doing it, and it's growing, and they have to do something, because really they haven't built lots of new stores in a long time, and for decades that was the way they grew. And as a matter of fact, at one point, McMillan was saying when he came in, they were debating internally, are the stores going to go away? I mean, which is kind of an amazing thing for people at Walmart to be doing. But anyway, so they're in a different place now, a better place.
We're speaking right now with Devin Leonard, senior global business writer for Bloomberg Business Week. He and Jaewon Kang are the author of a Bloomberg Business Week cover story in the forthcoming issue, Walmart Reboots Again. The Trump administration question, I think, is a really interesting one, Devin. It's sort of the role that an executive such as this takes in this administration, in the sense of, okay, well, he's not on stage there necessarily, but he still wants to make sure that he's not ignoring the president of the United States. What is the tension there?
Well, there's a couple,
especially because Bezos is very prominent, and that's his big rival.
Yeah, I mean, they
Did he address that with you?
What?
That, at the inauguration?
Well,
and
we talked to him before.
Oh, okay,
that,
okay. So forgive me.
Yeah, no, it was 3 days before.
Okay.
But no, they have to worry about tariffs, obviously, and they could get hit with that, depending on lots of produce and things like that, from Mexico, home goods, appliances, and things like that from China. They say they say like 2/3. Sorry, I think it's 3/4 of what they sell comes from the U.S. I'm not sure exactly how that's defined, but they sort of downplay that and say, well, we've been dealing with tariffs since 2017. So
wow, you said 3/4 of what they sell comes from the U.S. That's a stat they like to.
Well, and we probably should have dug into that a little bit more, because I don't know how you define that. They said made or grown, so I guess that includes food. But anyway, I mean that was why they were saying they're not too worried about tariffs. And I think any big employer has to worry about the immigration restrictions that are coming down, the possibility of workplace raids, and also just it's going to make it harder for them to hire people. And then there's the whole business with what's going to happen with RFK Jr. and
food stamps, right?
Yeah. I mean, taking away not allowing food stamp payments for sodas and junk food, which Walmart sells a lot of. So
I was shocked. Walmart receives an estimated 26% of SNAP, Supplemental Nutrition Assistance Program spending. That's a big
Jaewon told me that. I was shocked too. Yeah,
that's a lot. Hey, listen, we've only got about a minute left, and I feel like the way you begin it and kind of end this idea of McMillan in terms of Sam Walton's office. It took him a while to even, once he was CEO, right, to kind of sit there and feel like he could be there. But now he's kind of a little melancholy about leaving it.
Yeah, even though when you think about it, obviously
you don't describe it in a really. It's not an upscale corner CEO.
No, he can do better. He can be in the higher floor and have a little more light. I have a feeling that the new campus is going to suit him just fine. So
he'll be okay.
Yeah,
he'll eventually.